What if I told you the next trillion-dollar boom isn't in electric cars, crypto, or even AI, but in something far more dangerous and almost no one is talking about it yet. Right now, behind the scenes, the US military is preparing for a massive shift in how wars are fought, and it involves deploying over 300,000 autonomous drones, fast, cheap, and powered by artificial intelligence. This isn't some distant future prediction. It's already happening. In fact, analysts are now calling 2026 the year of the drones, as defense budgets surge to record levels and governments race to dominate the skies with unmanned systems. But here's where it gets really interesting. While most investors are busy chasing big names like Tesla, Nvidia, or Palantir, Wall Street has quietly identified a small group of drone-focused companies that could benefit massively from this shift, and one of them is still flying completely under the radar. This company isn't trending on social media. It's not being hyped by mainstream influencers, and yet behind the scenes, it's securing contracts, expanding globally, and positioning itself right at the center of modern warfare. The kind of positioning that, historically, has turned unknown companies into multi-billion-dollar giants almost overnight. So the real question is, are we looking at the early stages of the next big defense stock breakout, or just another overhyped story that fades away? Because what I'm about to show you might completely change how you look at the future of investing in defense, AI, and global security. Now quickly, I'm not a financial advisor, and this is not financial advice, so always do your own research before investing your money. But if you're someone who's interested in finding opportunities before the crowd catches on, then you're going to want to pay very close attention to this. And if you enjoy discovering hidden stocks like this, take 1 second to hit the like button. It genuinely helps push this video out to more people, and subscribe if you want more deep dives like this. With that said, let's break down what's really happening here. Because once you connect all the dots, this story becomes a lot bigger than it first appears. Right now, something massive is happening in the background of global defense, and most people haven't fully realized it yet. Governments are no longer preparing for traditional warfare. They are preparing for autonomous warfare. That means fewer soldiers on the ground and more intelligent machines in the sky. The United States is leading this shift, with record-breaking defense budgets and a clear focus on one thing: drones. Not just a few thousand, but hundreds of thousands of low-cost, AI-powered drones designed to overwhelm and dominate. This is a complete shift in strategy. Instead of relying on expensive fighter jets and legacy systems, the focus is now on scalable, fast, and highly adaptable unmanned systems. And when billions, potentially trillions of dollars start flowing into a single sector, it tends to create massive opportunities for the companies positioned early. That's why analysts are already calling 2026 the year of the drones. But here's the key: by the time this trend becomes obvious to everyone, the biggest gains are usually already gone. The real money is made by spotting these shifts early, before they become headlines. So now the question becomes, which companies are actually positioned to benefit from this shift? Because not every drone company will win. In fact, most won't. The company we are looking at today isn't just building drones, it's building an entire ecosystem around defense, AI, and autonomous operations. Think of it less like a single product company and more like a network of specialized technologies working together. Through its subsidiaries, it operates across multiple layers of the defense stack, from drone manufacturing to counter-drone systems to AI-driven intelligence platforms. This kind of structure is important because modern warfare isn't just about offense, it's also about detection, disruption, and protection. And that's exactly where this company is positioning itself. It already has a global footprint, working with government and defense-related entities across more than 25 countries. That kind of reach doesn't happen overnight. It suggests relationships, credibility, and the ability to execute on large-scale contracts. And when you combine that with the current global demand for advanced defense systems, it starts to paint a very interesting picture. But what really takes this story to another level is a recent development that could completely change the trajectory of this company, and that's the merger. Because up until now, this company has been growing, but still operating somewhat on the outside of the biggest defense contracts. And in the defense world, access is everything. You can have the best technology in the world, but if you don't have the right contracts or relationships, scaling becomes extremely difficult. That's where this merger comes in. By combining with an established US-based defense contractor, the company is no longer just a participant, it becomes a prime contractor. And that's a huge shift. It means direct access to major US military programs, long-term government contracts, and significantly larger deal sizes. This isn't just about growth, it's about unlocking an entirely new level of opportunity. It also strengthens its presence inside the United States, which is one of the most important defense markets in the world. So this isn't just a small upgrade. This is a strategic move that could redefine how big this company can actually become. Now, let's talk numbers, because this is where things start to get really hard to ignore. The company reported around $50 million in revenue for the full year, and now it's projecting between $170 million to $180 million for the next year. That's not just growth, that's explosive growth. We're talking about roughly a 3x increase in revenue in a very short period of time. And here's the part that makes it even more interesting. These projections don't even include potential contributions from the recent merger or future acquisitions. In other words, what you're seeing here could actually be the baseline scenario. And if you followed high-growth companies before, you'll know that when revenue starts accelerating like this, it tends to attract serious attention from institutional investors. But there's also something else worth noting. The company has a track record of beating its own guidance, so there's a possibility that even these aggressive numbers could end up being conservative. And if that happens, the market usually reacts fast. If the revenue projections weren't enough, the contract activity tells an equally compelling story. Because over the past few weeks alone, this company has been announcing new deals at an almost non-stop pace. We're talking about multi-million-dollar contracts across different regions: Israel, Europe, Germany, and the Middle East. And these aren't random one-off deals. Many of them are tied to critical infrastructure, national security, and long-term defense programs. That's important because it shows real demand, not just hype. One week it's a new counter-drone system order, the next it's a government contract, then another strategic investment. When you start seeing this kind of consistent deal flow, it usually indicates that a company is gaining momentum within its industry. And momentum matters a lot, because in sectors like defense, once a company proves it can deliver, it often leads to repeat contracts, larger deals, and deeper integration into government systems. And that's exactly the kind of cycle that can drive long-term growth. Now let's see how Wall Street is reacting to all of this, because this is where things get even more interesting. Currently, there are multiple analysts covering this stock, and every single one of them has given it a buy rating. No holds, no sells, just buys across the board. And that's not something you see very often, especially with smaller companies. On top of that, the price target suggests significant upside from current levels, with some analysts expecting substantial growth if the company continues executing on its strategy. But here's the thing, analysts don't just throw out bullish ratings for no reason. These reports are typically based on revenue projections, market positioning, competitive advantages, and future potential. So when you see this level of alignment, it usually means the underlying story is strong. That doesn't guarantee success, of course, but it does add another layer of validation to what we are already seeing. Now, with all that said, it's important to look at the risks, because no investment like this comes without them. One of the biggest concerns here is dilution. Over the past couple of years, the company has issued more shares, which can reduce the value of existing shares if not managed properly. And this is where things get a bit tricky. Dilution isn't always bad, it really depends on how the capital is used. If that money is being invested into growth, acquisitions, and scaling operations, it can actually create long-term value. But if revenue doesn't grow fast enough to justify it, then it becomes a problem. So the key metric to watch here is simple: can the company grow its revenue faster than it dilutes its shares? Because if it can, the overall value can still increase significantly. If it can't, then investors could face pressure despite the growth story. So when you step back and look at the full picture, it becomes clear why this company is starting to attract attention. You have a massive macro trend with defense spending shifting toward drones and AI. You have a company building a diversified ecosystem across that space. You have a major merger unlocking access to high-value contracts. You have aggressive revenue growth projections and real contract momentum backing it up. And you have Wall Street analysts aligning on a bullish outlook. But, at the same time, you also have risks: execution, dilution, and the uncertainty that comes with any high-growth company. And that's what makes this such an interesting situation, because it's not a guaranteed win, but it's also not something you can easily ignore. It's one of those setups where, if everything goes right, the upside could be significant. But if things don't play out as expected, the downside is real too. And that's exactly why opportunities like this exist in the first place. So at the end of the day, this all comes down to one simple question. Are we looking at a company that's perfectly positioned at the center of a massive global shift, or is this just another story that looks good on paper but struggles to deliver in reality? Because the opportunity here is clear. Defense spending is rising, the world is moving to autonomous warfare, and drones are becoming one of the most important technologies of the next decade, and this company has managed to place itself right in the middle of all of it. But, as we talked about, it's not without risk. Execution matters, growth needs to be sustained, and dilution needs to be controlled. That's what will ultimately decide whether this becomes a breakout success, or just another missed opportunity. Now, I'm really curious to hear your thoughts. Do you think this is an earlier stage winner in the making, or is it too risky at this point? Drop your opinion in the comments. I read every single one, and it helps create better discussions around these kinds of opportunities. And if you found value in this breakdown, take a second to hit the like button. It genuinely helps the channel grow, and subscribe if you want more deep dives into hidden stocks before they go mainstream. And if you want to see another high potential stock that could be flying under the radar right now, check out the video on your screen, because that one might surprise you even more.